Welcome to Markets Now. I'm Michelle Rook with Shawn Hackett, Hackett Financial Advisors. We ended higher today in soybeans and cattle, lower in the corn and wheat complex, but we were mixed in the hogs. And Shawn, let's start off with soybeans because it looked like we were putting more Brazil weather premium back in. Let's talk about how ominous this weather situation is and how much premium you think we need to have in that market.
Well, let's understand that it's been the driest and the hottest growing season in northern Brazil where they grow soybeans ever. And these rains that were supposed to come in the back half of December that were really supposed to help recharge and provide a respite are falling short of the mark. The models continue to be wet biased, meaning that they overpromise on the rains and the rains don't deliver. Missing this rain event in the back half of December is a huge miss as we move into pod setting. You know, I think we were up around $14, Michelle, give or take, before we took the weather premium off when these rains were supposed to come. I think we might need to go back there and then take another look to see if this dry weather pattern persists through the duration of the pod setting season or not. But certainly, I think today might be the start of very, very quickly putting weather premium on with lighter volumes. It just doesn't take as much to get markets going in the last 2 weeks of the year.
We also got some help from the product values, both higher there. I know on Friday, the March meal had dropped below that $400 mark, but that's got to be a value level for some of these end users, I would think.
Absolutely. I mean, this is a value buyer for those that need physical feed. Remember that this new president down in Argentina slashed, they play this game where they slash the currency and provide, this windfall opportunity to move product and get an economic advantage for those producers that have meal and oil to sell. And that kind of depressed the market for a few days. But the reality is they had a half a crop last year. They don't have a lot of meal to sell. Whatever they did sell is over with. And I think that causes a low in the market, and the market now moves back up on the scarcity trade that it should continue to have to trade going into at least the end of the second quarter before we really see fresh supplies coming out from a better crop out of Argentina. So I do think this is a great place for livestock producers to look for, lock in some physical needs here.
Wheat market was lower today. Was that these rain chances in some of the HRW areas or just the lack of demand because it was China business that really pushed the rally in the first place?
Yeah, I really don't think weather's a big driver this time of the year. I know some people talk about it, but I really think if what made this market go up $1 from the lows in short order, it was demand for U.S. wheat, especially from China, and it was Russia having the lowest wheat exports of the year. Both conditions, are turning the tide on this bearish narrative. And but if you don't show that demand, and then you lose that driver for the marketplace at a time of the year when volume is lighter, and oftentimes seasonally, we don't get a lot of physical business until we get into the new year. So I think that's really what's going to drive this wheat market for the foreseeable future is Russia exports staying low and demand showing itself. It just didn't do it this time, but we think wheat demand will come back. It just might take until January to see it.
Shawn, let's talk about corn. Followed wheat today, but with what you just said about soybeans having to put weather premium in, if soybeans take off, will corn follow?
I believe if soybeans have a large enough rally, they will start to win out over corn versus the wheat market, which won out today. Remember, corn's stuck in this middle, right? We won't be planting corn this year until late January into February. So it's hard to get people excited about weather for corn until we get there. But this big rain event miss here in the back half of December means that we're going to be planting late and we're going to be planting less acres. And what are the yield prospects for arid soils in Mato Grosso and northern Brazil if this drought pattern continues into January like it looks like it's going to? People are very going to quickly start to put pencil and paper down and say, shoot, we could be down 15, 20, or 25% like we were in past years, like 2015-16 was a similar year to this where we had a significant reduction in the corn crop. So we're going to be quickly moving into when corn should be moving up for weather versus soybeans right now.
Okay, so it'll be a story eventually here for the corn market. I have to ask you as well, China corn imports looking like they're at a record large level for November. What does that say about what's going on in their market and if they will need corn from the United States? Because right now we are one of the lowest places to buy corn in the world.
I don't listen to what China says about their crops. Listen to or watch what they do. We know that we had incredible flooding in every key growing region of China during their growing season. And while they'll never tell you the truth, and while no one else is allowed to tell the truth there, their crops could not have been top notch. They had to be down significantly. And the fact that they're large buyers of wheat, which a lot of times in China is used as a substitute. What are they buying? They're buying a lot of low quality wheat, potentially as a substitute feed product. It tells me that their corn crop is not record setting like they're suggesting. And if they start worrying more and more that Brazil, which has had the miracle exports last year from the largest crop they ever produced, comes up 20 to 25% short, they're going to have to buy even more corn from us because Brazil's not going to be there selling them endless corn. So it really sets up an exciting first half of 24 for U.S. demand, where 23 was a big disappointment.
No doubt. Let's hope we get some of that business. Cattle market. Okay. We had a higher weekly close last week. It looks like we've perhaps confirmed a low in that market. How much of a recovery or retracement do you expect to see here from a chart perspective?
If we think what happened here, if you think this through, we blew through the all-time high in 2014 and went through a parabolic rise in both feeders and live cattle. And then we had the crash, came back down to those levels, which now becomes support. This would have been a logical place for the market to bounce and show some bottoming action, which we clearly have seen. I don't think we can get much more than a 30% retracement out of this. I don't see the fundamental reason why we should see this market enter a renewed rally back up. We have plenty of feed on, plenty of cattle on feed right now to bring into the market in the first quarter. Weights are way up, and when I look at the beef cutout price, it's accelerating to the downside for the third month in a row, which says that any bounce is not likely going to be met by increased packer demand. So right now, if I am a livestock producer in cattle and thinking this through, I have cattle that I need to price, and I didn't lock in that better price in the fall, look to physically sell a 30% retracement off the lows. I think that's going to be a good short-term price to try to maximize money home on the farm.
We do have a cattle on feed report out on Friday, though. Will the market be a little cautious going into that just because placements have been up the last two reports?
I think they're going to be very careful because they got really, really surprised at the last report showing significantly higher numbers than anyone was expecting by a long shot. So definitely caution going into that report at a time of the year where there's less traders around and less volume. So always got to be super, super careful with a report like that this time of the year.
And the hog market ended mixed. Nearby contracts under some pressure here. Feb last week became the spot month and now is at a premium to where the lean hog index is, which seemingly has not been able to catch. So when do cash and cutout values catch here, do you think, to help stabilize this market?
I think we're pretty close to it. If you look at the pork cutout price, we did make a low and we had a kind of a spike rally and are sort of now backing and filling at a higher low level. Looks to me like the pork cutout price, which really leads the hog price higher, is likely in the early stages of making a low. What's even more interesting, we're not going to have a big move in hog prices, in our opinion, without having Chinese demand coming back. And Chinese demand is going to come back if we see the hog price, which has been crashing all year long, reverse. And we saw that in the last 2 weeks. We had a dramatic crash on record volume, reversal higher, spike trade, V bottom kind of trade that has all the earmarks of an exhaustion bottom and a reversal higher, suggesting that finally we might have seen the Chinese herd liquidation from ASF complete as we go into those holidays, those New Year holidays where they consume a lot of pork. The next thing we're going to be looking for is for the Chinese pork price to start moving higher, which, believe it or not, has not made new lows for the last 3 to 4 months, despite incredible negative sentiment. So we kind of think that the hog market is at one of these places of maximum pessimism, oftentimes where important lows are made. We think that things look much, much brighter for the hog market going into the first half of 24 than we saw most of the year this year.
So do you also believe that because of what you just said, that China is going to be in buying pork from the United States after the first of the year?
The way we see it is, first, we think the pork price in China is going to start to surge higher after they start generating a pork shortage. which then will allow for China to come in and start buying pork more aggressively. So think of it this way. If they're going to need much more pork from foreign lands in the second quarter, they can't wait for the second quarter to buy it, because you got to buy it and ship it and bring it. All this takes time. When would they start buying it? They should start buying it after the New Year's holidays are over. I'm expecting to see China coming in, increasing their buying for U.S. pork, after their New Year holidays. I think that would be a logical place for them to start doing that. And I'd be looking for the China pork price to start really rebounding, to follow along with what's happened with the hog price there, as an additional sign that things are finally turning in the global pork price.
All right. Thanks for your insight as always, Shawn Hackett with Hackett Financial Advisors. That is Markets Now.